Troubles don't seem to end for beleaguered edtech giant Byju's, once valued at over $22 billion, India's most valued startup. It is now looking at raising $100 million at a valuation of only $2 billion from existing investors, as per a report by Bloomberg today. To be sure, this is not a markdown on the books of investors like Prosus and BlackRock that have surfaced many times over the last 1 year, but a real down round when fresh capital is being raised at a valuation of just 10% of its 2022 high. The consolidated financial statements reported by the company don't paint a rosy picture as well. After an already 22-month delay in filing, the company has now reported a net loss of 8,200 crore rupees, doubling of losses from the previous year, while revenue has also doubled in the same period. But losses at twice the size of cumulative revenue is another red flag for a company whose path to profitability remains elusive. Joining me on this broadcast are two very special guests, Srinath Sridharan, policy researcher and corporate advisor, and Sriram Subramaniam, founder and MD in Govern Research. Srinath, let me start by asking you, these numbers from the Byju stable have been elusive all this while, and finally when data is beginning to trickle in, the figures are not looking good at all.
Not at all. I think the very fact that the numbers have been delayed for nearly 22 months, and despite this, the sense of gloom and doom still pervades. And the conversation about them raising fresh capital to pay debts and dues is, again, I think, abysmal. The very fact that you have to raise capital to pay off what is originally a debt repayment and of sorts is worrisome. And here, I think, Kartik, as we've spoken many times, I'm just so glad that these are monies from the Florida pensioners and not the Indian pensioners of sorts.
Right.
This money is going to, I don't know whether it's going to chase good money after bad, but
Yeah.
it is definitely not going to impact valuations in the further round of build a business.
Okay, so Srinath, help me understand, obviously there is this growth at all costs pressure that comes from VCs across the board. But we are right now looking at a scenario where that growth also, in terms of adding new customers, that data hasn't come in. In fact, before coming on the show, when you and I were talking, you were saying that we need to see that number, that number ticking? Is Byju's getting more users on its platforms? Because it seems that the edtech story, which really witnessed a boom in the COVID era, is now losing its sheen and is losing its viability as a business model altogether.
Yeah, that's true. I think Byju, with its, enough issues, has become the bad adjective for everything associated with EdTech. Be it the brash and the bold valuations, almost to say that they would be the most valuable Indian company of sorts.
Yeah.
To go from being brash valuation to crash from that initial euphoria.
Yeah.
And then not even having the cash to pay employee salaries and vendor dues.
Right.
And now you're saying they're going to do the other one, which is to slash valuations to raise funds.
Right.
It's kind of worrisome, right? You don't know whether they're adding customers. If
Right.
the customers are staying back and renewing their contracts for the subsequent year, then we can at least say that the edtech offering that they've done so far is working. So we don't know whether they're going to pour more money in the sales and marketing effort just to keep this entire sales engine and the customer acquisition going on. And
Right.
that's a worry. And to me, more importantly, what is not spoken about, Kartik, is this, right? All the allegations around the company that have been coming over the last so many months.
Of course, the FEMA
Nothing is closed.
violations
Everything
being
is
not
pending.
least among them. The FEMA violations not being least among them.
Correct. Nothing is closed. So whether these are the financial mishaps or the issues, they're all due.
Yeah.
And I think this is also a very desperate effort by the existing investors not to liquidate the company or write it off. Probably because for mostly Western investors, this is January and the new financial year has started. They
Yeah.
they might be doing their own fundraising.
Yeah.
But I think to me, this is like end of the rope somewhere there.
End of the road is a word coming in from Srinath. Sriram Subramaniam, thank you for waiting patiently. I want to actually begin by asking you, number one, $100 million to be raised at a valuation of $2 billion is in any case too little for Byju to overcome all its losses and all its miseries which it is facing presently and has been facing. But I think more importantly, is there a lesson here in corporate governance in the mandated reporting at all costs and not really subjecting investors, even though you're not a listed company, you have investors, not subjecting investors to these delays after delays after delays? And do you think there is time now for maybe, if not budget 2024, some action from MCA in terms of getting these startups to comply?
Yeah, thank you again for having me on the show. I think thankfully Byju is not a listed company. If it were a listed company, it would be much more, I would say, the corporate governance issues would be much more paramount. But
sir, that's my point. Should norms be different for listed versus unlisted companies? The only difference being retail investors are not impacted from a company like Byju's, but there are institutional investors who in any case are subject to this misgovernance when it comes to the corporate.
No, so definitely there are already regulations in the Companies Act which allow for course of action by the institutional investors. But these institutional investors are informed institutional investors. They know how to act against a Byju. They can seek to remove the directors, remove the founders. They can seek to place themselves as directors. All those mechanisms already exist in the Companies Act from a corporate governance perspective. So, so that is not a challenge for the institutional investors. I will never fault the corporate governance of the current from a regulatory perspective. See, even the provision of late filing of annual reports is allowed with fines and penalties in the corporate law. So that is also not a concern. Obviously, these are telling issues. These are red flags. There are some commentators which are saying that these type of startups which have very high valuation should have independent directors on the boards, etc. So these are, of course, forward-looking things. They don't need necessarily to be now there from a corporate governance perspective. Two is this $100 million is largely a distress funding. There is no measure of valuation. Today, if somebody writes a check for $100 million and says, I'm going to take 20% shareholding, I think Byju will agree to it, because at the end of the day,
it doesn't have a choice right now. There aren't too many investors who want to look at Byju.